And we are going live. We are live. So, hi everybody. Hope you can hear us. I'm actually going to, I'm trying to sort of manage this and speak at the same time, which is quite a challenge because there's a lot going on here. I've got plenty of tech on my table. For some reason, I'm not getting a transition to my screen. That's really weird. Tim, are you there? Can you hear me?
I can hear you. I can hear you. I can hear. Actually, I can hear something pre-recorded, perhaps.
Oh, really?
Yeah.
Oh, okay. Oh, I see why. Yeah. How about that? Is that better? Can you see that? Can you see me, Tim? Can you hear me?
I, I, there are two of you. I think there's a slight delay where that's coming from.
Right. So, is this? Yeah, that's probably coming through the computer through your
Ah,
YouTube. So, if you could just mute it. Hello, everybody. If you can hear us, you can see that this is definitely very much live. My screen's gone blank, so it's all
oh, that's better. That's better now.
it's
It's
all
better now. Yeah,
it's
I've
all
muted it.
happening. Yeah. If you mute it, that will. For some reason, my screen's gone. I don't know why. No, there it is. We're in business. I see why.
It's an extremely emotional moment.
It really is. This is crazy. Hello, everybody. Thank you for joining our live stream. I've seen from the comments that we've got people here from Sweden and elsewhere. Jonathan Morrow can't make it, but that's a shame. Sorry about that, but you'll be able to pick up the live stream recording that we'll do, obviously in a few days. We've got another. Oh, we've got Johan from Sweden. Good evening from Sweden. Can you hear us? If you can, just put something in the comments just to say you can hear
A
us.
thumbs up or something would be helpful.
Yeah, that'd be really helpful. Tim, it's so let's crack on. It's the 200th episode. It's come very quickly. Hello. Have you got something to drink to celebrate?
And I'm actually, my brother very kindly bought me some. I think it's called Casa Azul
Okay.
tequila.
Ah,
For my birthday, and I
yeah.
had rather too much yesterday, so I'm having a day off today. But it's gorgeous stuff.
Oh, right. Okay. Well, I'm going to open a bottle and of prosecco. Why not? So here we go. This could go terribly wrong. Fudge. Right. Did that blow your ears off? Great. So we got Paul Sheldon saying we're loud and clear, all good. That's fantastic. Thanks, guys. Really appreciate that because there was a bit of a technical error at the start. So, Tim, a few questions about our 200th. If you had to go back to one and pick one of your favorites, of course they're all your favorites, as if they were your children or your dogs or whatever it might be. But what would be a memorable one for you?
It's a really good question. Like you say, they're all good, or they're all favorites anyway. I keep, for some reason, coming back to a comment that your Guido Hulsmann made.
Oh, you love that.
And that's a long time ago now. So I don't know what episode that would have been, maybe 50, something like that.
Yes.
But it was quite early on. And for those people who don't know him, Guido is a professor of economics and teaches I think in France somewhere. But he teaches Austrian school type. Cheers, Paul.
Cheers.
Teaches Austrian school economics. And we had a chat about obviously monetary things and financial things and market things. But I remember distinctly asking him if you could change one thing about the system, what would it be? And his answer was, I found really surprising, maybe not so surprising now with what's happened over the last few years. But his answer was, I would get government out of the education system.
Yeah, I remember that very
And I
well.
thought that was it was a slightly left field type comment. But the more I think about it, the more I think he's absolutely on the money. I mean, as a sort of Austrian / libertarian, I say the government should get the hell out of everything. But if we're going to start the ball rolling, it has to be education.
That's a really interesting. That opens like another series of questions that I'd kind of like to ask you. I remember asking Dominic about this, Dominic Frisby. We were sharing a cab, and I was about the libertarian stuff.
Yeah.
Which I'll come on to in a second. But first of all, your point about the education system is for people who like you and me who are in the markets and people, listeners and everyone who have an understanding that in order to really truly understand the markets, you've got to do your own research, your own education. because you are not being taught it properly from a very early age. And Jasmine Birtle set up her own Money Magpie on the basis of that. I remember her podcast saying how she realized she just didn't understand money. And even people, dare I say it, in finance who are supposed to understand it, don't truly understand it. So it takes a very, it makes you quite a skeptical person to do your own research. It doesn't mean you have to be cynical, but skeptical, certainly. And you end up with just an automatic mindset of thinking for yourself, trying to work things out yourself. And having a couple of, I've got a couple of kids. I know I talk about them sometimes on the podcast, but it's really interesting that you end up battling the education system to kind of teach them about the things that are important, that we know are important. And one of the most important things, of course, is money. And that's the root of all evil, of all evil, as they say. But it's going to be the biggest determinant of how miserable or happy people's lives are going to be, as to whether they truly understand it. All the decisions that you make as a kid and growing up and looking at pensions and stuff, things like that you just don't think of, that they don't truly. And I'm not saying it's the school's fault either, because schools are taught the curriculum that they're given by the government, and they very often are between a rock and a hard place. They've got the government telling them that they got to teach one thing. They got the parents probably not happy with what's being taught sometimes, and they've got what they possibly want to teach. And obviously, it's not the easiest job in the world. I wouldn't really want to do it full time, but that's the main problem. And you can go down a rabbit hole of saying that it's done on purpose, that people aren't taught it on purpose. But one thing that makes me quite sad is how our education system has changed in terms of going to university, where it used to be free or subsidized. And whilst I believe in the libertarian idea that perhaps capitalism should decide it, I think in terms of education, that was one thing that the government cleverly got the students who would be the most likely to rebel into debt, so that they don't want to rebel. And it's another way for banks to make money, because it's the credit card debt. It's when interest rates were at 0.25 or whatever, they were charging 6.5%, because my nephew had to take out a student loan. 6.5%, which I think is terrible. It's usurious. I can't believe that they did that. I think it's really unfair. So education system, absolutely. But in terms of libertarianism, the conversation I had with Dominic in a cab was I was on the tube, coming out of the tube, and this guy just pushed his way through the barrier. And of course, they don't do anything about it anymore. They just don't. I mean, I don't know what it is, but they just don't seem to care. And I said to the guy, the attendant there, well, why have you just let this guy through? And he said, we've been told not to do anything. I saw this guy then get on a bus not through the main section, through the back section. And obviously, again, not paying. And it was at points like that I wondered how libertarian values kick in, like him as an individual. How does that work? Now, Dominic had an answer for it, which I thought was quite an interesting one. But when it comes to things like crime and the sort of welfare of the individual and people who do things like that, what's your view about libertarianism? I mean,
where to start on this one? I mean, I think for me that there's a huge overlap between the libertarian cause and the so-called Austrian or classical economics cause. So I would define both as basically being interested in sound money, small government, and, for want of a better phrase, simply freedom. So whether you're talking about libertarianism or whether you're talking about Austrian school or classical economics, they kind of amount to the same kind of things. And I think the best summation of this I've heard, I forget who said it, basically is your freedom to throw your arms around stops when my nose is in the way. So there has to be some sort of grown up thinking about, you can have rights, but they don't extend indefinitely. So there has to be limits, and most grown up people, I think, just naturally know when that should happen, when that should be curtailed for the greater good. But it's more I think, getting back to the point, it's more the point that whatever government touches turns to dust. So I think it was Milton Friedman that said, if you put the the federal government in charge of the Sahara, pretty soon there'd be a shortage of sand.
Yeah.
And that's really the issue, that it's as much about trying to sort of, I think the world has many problems right now, and I'd say that many of those problems are to do with the fact that government is just metastasized.
Yes. So his response was that it's a private property issue, and therefore that they should seek some form of compensation. But I'm not sure it's quite as simple as that, because I think they might be subsidized. The tube might be subsidized, or the travel network might be subsidized. But it's that seemed to be quite an interesting answer. But the point basically stands that that government, layers of government or layers of management that sit between the people who are doing the work and the the top of the chain, all those layers that are being paid for, and the inefficiency, and especially within government with things that need to be constantly regulated. And it was the book Sapiens that you talked about many times, and then when I got around to reading it, I couldn't believe I hadn't read it before. It was just one of those books that talked about how the Dutch basically led the world, and they did all of this without government. It was before government was formed. That was like a massive aha moment for me. I was like, clearly, if the government gets out of the way, business can foster and it can flourish. But the possibly one of the problems with that is when, well, what we're seeing now, people think what we've got now is capitalism. What would you say to that?
No, it has, I mean, one of the best guests we've had on is Sir Stephen Wilkinson.
Yes.
And I remember he was the person that introduced me to the phrase capitalism or crony capitalism.
Yes.
So that's the problem. And without wishing to sort of sound overly negative or pessimistic, 2008 showed that the whole financial system had fallen victim to regulatory capture. In other words, they had no room for maneuver because the banks had taken over effectively the regulator's role. So Lehman was allowed to fail, but then pretty soon everybody else got bailed out. And I think the issue now is that I was maybe naive in thinking that problem of regulatory capture was limited to finance. But as we've seen from the last few years, it relates to everything. I can't think of a single area of business now that isn't hopelessly corrupt. And so you have this interplay between overly large government and basically semi-corrupt businesses. And the result is you now have the world we're now living in. We've given a few presentations lately to institutional clients, people who own our fund, which is on a bit of a tear at the moment because it's got so much exposure to gold and silver miners.
Yes,
so I'm happy to report that.
I was going to come on to that, but yes.
And
brilliant.
Basically, this is really the issue, that that there is just so much corruption in every walk of life now. So what I thought was limited, what I feared was limited to the financial sector, now seems to apply to big tech. It applies to big pharma. I'd be hard pressed to identify a part of business now that isn't basically tainted in one way or another. So as you say, it's not capitalism at all. It's some sort of corrupted version of capitalism. And I suppose one answer to try and deal with that is to respond by, if it's nothing more simple than just giving your investment dollar to the best run businesses that are run by principled entrepreneurs rather than greed heads.
Yes. And how would you go about doing your research in terms of picking the good companies out? Because that's pretty hard.
So we deliberately set our stall by being sort of Benjamin Graham style value investors. And the best way I could sum up the Ben Graham value approach is basically don't buy rubbish. And I think we can agree between us what rubbish constitutes. It's either profitless or it's just bad business.
I'd like to extend that when you finish this bit, because I'm really interested in how you value things. But yes, so don't buy rubbish.
So firstly, don't buy rubbish, and then when you find the good stuff, and we can debate what the good stuff is, don't overpay for it. So the two single most important metrics for us at stock selection are, firstly, cash flow generation. So they need to be generating jam today, not just jam tomorrow, but also little or no debt. So that measures more of a sanity measure, that if the economy hits the skids, it'll be the most heavily indebted companies that fail first, whereas the ones that have little or no attendant debt are more likely to make it through. So those are the two sanity tests, the sort of cautionary things. And then you go on the basis of more subjective assessments about, say, executive quality. My favorite anecdote, and I can't remember the company, but this is from a book about basically value investors. And this was a guy who ran radios. He had multiple radio stations, and his advertisers were constantly, or sponsors were constantly, through the board saying, "Look, you've got the cheesiest offices in the world. Can you just not do them up a bit, because it looks bad?" And his response was that the two bits of the office building that faced the road he had painted, and the other two that were not facing the road he left untouched. Now, whatever else you think about that, it's fantastic capital allocation, because he treated his shareholders' capital the same way as if it was his own. And that's really what it comes down to, that so many of the best businesses, you can tell they're well run simply because of how it comes down to the phrase capital allocation. The best CEOs are extremely careful not to squander money. And you can tell the ones that do, because these are companies that have everyone's face in the annual report, and the whole thing's a vanity exercise. But ideally, an annual report should be something closer like to Warren Buffett's or Berkshire Hathaway's website, which looks like it was made about 1978. It hasn't been updated since. It's very, very sort of down to earth and pared to the bone. So capital allocation comes down to a lot of what we're talking about, which is, are you dealing with principled, shareholder-friendly entrepreneurs or not? And if you're not, then you're probably in the wrong investment. Yeah,
that's a brilliant way of describing. There was the opposite of that. I remember it could have been you talking about this, but there was a CEO who, I can't remember what book it was in or whether you said it, but apparently he was writing some notes. He was on the phone writing some notes, but instead of writing it on scrap paper, he was writing it on really expensive letter-headed paper. And he just scribbled a note and then just chucked it away. And it was indicative of his attitude to the money, the way he was managing or looking after the money or allocating capital in that business. It's the small things, but the most crucial things. So I've been reading a very interesting book about contrary opinion theory, and I thought it was recommended actually by David Hunter, whose pod I enjoyed thoroughly, and whose views on gold and silver were very much aligned with yours and mine technically, but yours, I mean, you're really you've been saying it for much longer, and it's been core to your whole strategy, investing in real assets. But his pod was timed very nicely with the move up that we've seen. But he recommended a book by David Dreman, of which I have a copy for you, because I'm sure you're going to enjoy it. And you were talking about your birthday, and I got you a copy for your birthday. But what was fascinating was his analysis of how undervalued companies, such as the ones that perhaps you were looking at, tend to have earning surprises. When they have negative surprises, nothing happens. But when they have positive surprises, those surprises last sometimes for more than 2 years. And companies that are expected to do well, the darlings of the industry, even if they get profits in line or better than expected, it has a very minimal effect on the share price. And if they, woe betide, if they get a profits warning or something doesn't, they miss analysts' expectations, then it changes. They will respond much more aggressively to the downside in those circumstances. And it was really very well put together. It was a lot of psychology, a lot of what we've talked about, but in a really interesting and really interesting way. And it looked at three main pillars of investing, and one was obviously value investing. So it was just talking about value investing the whole time, and your views were ringing in my ears as I was reading it. But he said price to earnings, price to book, and I can't remember the third one. It's been a busy day, but the first two, and there were strategies based on each one of those. So coming back to your valuation of what sort of suddenly ticks the box for you about a company before you invest in it, low price to earnings or low price to book, or a combination of both, or is this secret sauce and we can't talk about it?
They all work. So
they all work.
The problem with price to book is that it's most appropriate for like old line businesses, things like literally like construction, engineering, mining, that type of thing. But it's limited in application when you get to things like technology, because so much capital is intellectual property, which is it's not well served by those metrics. So the answer is you just have a variety and use whatever works. But I think the thing that convinced me about the value offering is, I'm trying to think what the source was now, because I know I could find it in old presentations, but it was from a book on value, and it was citing things like price to book, price to sales, all these different ratios. And if you bought the 50 cheapest stocks in the US market and then continually reweighted that every year so that you were always in the cheapest by price to book or price to earnings or whatever, you just made an extraordinary amount of money. So I think the data was for something like 1950 through to like 2000 or so, very, very roughly. And you made so much more money by concentrating on basically cheap stuff. It's almost obscene.
Yes.
You could argue that was the one-off, but I don't think it was a 50-year plus period, so it was fairly meaningfully and fairly construct. Anyway, so that's the value argument. I'm just going to dive in, if I may, to the chat.
We've got loads of comments. Yeah, absolutely.
So I'm seeing this remark from Johan Tiskland saying, what is the end game for all this government debt? A quick end or a drawn-out end? So
get comfortable.
It's a very good question, and you alluded to things like the gold and silver price, and we were early into that, and so you could argue that effectively we were wrong, because what it's shown in spades is the validity of the observation that things take far longer to play out than you ever thought possible. But when they start moving, they also happen more quickly than you ever thought possible. So that's certainly been the case for those of us sort of nursing allocations to things like gold and silver miners over the last few years. It's only really started to happen over the last 6 months or so. I mean, from your perspective, I would well, what's your thoughts on the technicals? Because the reason I'm so excited by this now is that I'd say there's three separate things that are in alignment. The first is, if you like, we'll get back onto the topic of debts. It is important, but you've got the backdrop of basically, let's say, the U.S. market, which the U.S. economy, U.S. government debt is now, the on-balance sheet stuff, it comes to something like $34 trillion, and that debt is expanding at the rate of $1 trillion every 100 days now. So I think that's literally the point of no return. I don't see how this, what we sometimes term it, is it's not a problem now, it's a predicament. Problems can be resolved, but predicaments can only be handled. So if you accept, and I'm repeating myself here, but if you accept the thesis that there's too much debt in the system, because we're in the same boat as the States, and most of the West is bankrupt, I'd argue, then there's only three ways of attempting to deal with a predicament. One is that you have enough economic growth to service the debt. I think it's impossible.
That's not possible. That's
I just don't think it's feasible.
But it would. Sorry to. I know we'll take the other two, but starting with that, is it possible? Is it ever possible to do that? I mean, you've got it as option one, but how much growth would you need in order to pay? Just a ridiculous amount.
Good question. But I mean, it's happened in the past when we've been able to right the ship. So I'm trying to think of the guys who did This Time It's Different. But basically, once you're comfortably above 80% debt to GDP, you're in real difficulty. And I think the Japanese are something like 270% now. Yeah. So, Japan was kind of the first developed country into this mess, and maybe going to be the first one that completely blows up through just the debt period of debt deflation. Anyway, so you've got economic growth is one, but I don't think it's possible. The second answer is that you default on it, and because we live in a credit-based system, that would be Armageddon. So what you get to through a process of logic and elimination is you inflate it away. So the reason I find the Austrian perspective so powerful is because you had people like Ludwig von Mises, who were he had first-hand experience of the Weimar hyperinflation in the 1920s. And he makes the point that, that inflation is not something that comes out of a clear blue sky or arises like the plague. Inflation is a policy. Inflation is, so there is an official policy of state-sanctioned inflationism. And if you're not aware of that, then, God help you. So, and this is kind of the unifying theory that sort of ties all these different threads together in investment right now. That it comes down to one very straightforward question: do you want, assuming the somewhat artificial situation that someone bursts in and holds a gun to your head and says you've only got one choice? That choice could either be you can invest in politicians' promises, in paper, in fiat currency, or you can invest in real assets. And we made the decision a long time ago that it's going to be the real assets as the way forward, because it's the only thing that makes any sense.
And how long ago
in a
was
period
that?
of debt, in such extraordinary debt overhang?
I've heard you talk about this obviously before, and it is so important. But going back to when you first made this discovery, this aha moment, we're of a certain age that we've seen a couple of crises. The biggest one being the 2008 global financial crisis. Was it before then, or was it after that it? Did you have it before, and then after that crisis it solidified your view, or was it? When did it start?
I think it was before, but obviously 2008 was the seminal occasion of probably my career. So I think I started to see the rot setting in 92. So I started work in 91 out of university, and I was a bond salesman for a Japanese bank. And I always cite this example. It was basically the sterling ERM crisis of 92, when sterling was ethnically cleansed from the ERM. And there's a sign of basically the different types of quality in terms of investment houses and investment practice. I was working for not a particularly impressive bank. So whenever it was that they hiked rates twice in a day, everyone's screaming blue murder and fretting about their mortgage costs. Whereas my brother, who was working for a more sophisticated investment business at the time, the first rate hike that day was met with stunned silence, and the second one was met with laughter. So in other words, most intelligent people could see that the whole thing was falling apart. So what September 92 taught me was never believe anything until it's been officially denied. In other words, just you cannot trust government, full stop, end of story.
Yeah, absolutely. And
so to answer Johan's question, I think my sense is that we are coming fairly close to the end game now. That, in other words, if you just focus on, say, treasury yields, I know where the, say, 10-year US treasury, which is probably the most politicized instrument in the world apart from gold. Let's say, for the sake of argument, it's, I don't know, it's 4.5% or something like that. That was below 1% not so long ago, and it's exploded higher. And my concern would be an existential one, which is, for the first time perhaps ever, higher bond yields may not do the trick, because they will not be seen as basically a buying opportunity, but as a sign that the things are spiraling out of control. So I think the Fed is completely stuck now. Because it's damned if it does, and it's damned if it doesn't, because I just don't think there's any way out of this debt spiral now. We're in an election year, so they'll no doubt try and pull a few rabbits out of hats. But in the bigger picture, the fact that you've got this sort of this horrible problem in war in Ukraine and elsewhere, but specifically the Ukraine thing, I don't think one can over-egg the story too much about the importance, the significance of the US putting sanctions on Russia, because just at a time when the US desperately needs friendly foreign governments to buy its debt, they've basically just effectively said to those, they basically just stuck two fingers up to those governments saying, well, we don't care if we just steal your money. So nobody in their right mind should trust the US government now. And if that's how they treat a nuclear superpower, then where does that leave the rest of us? So it's the most I think the sanctioning Russia, for Ukraine, will end up going down as one of the most catastrophic self-inflicted injuries of all time.
So, question of war is we're going to discuss that in a moment, but I just want to have a quick look at the comments, just to say a few hellos to people who have put stuff in the chat. So, Gentle Brother, thanks for putting me on to the Reminiscences of Stock Operator. Yeah, brilliant book. Paul Sheldon saying, could you get Nick Hudson on again? He retweeted RFK Jr. saying Bill Gates makes money on all his philanthropy. Do you think that's true? And we've got Bro and Ling. Thanks for all the knowledge. Learn from you guys is priceless. Cheers to 200 more. That's really sweet. Thank you. Really appreciate it. And we've got Red on White in here as well. We've got Tim Parker. Tim Parker's, I don't know if you can see that comment, Tim. Debt is the one thing.
Debt is one thing and looks insoluble.
Yes.
One for you there, Paul.
Yeah, okay. What do you see as key signals of a breakdown? Okay, that's a really, really interesting question. And I'll answer it by saying that I look at the crisis of 2008 as it's known to everybody as the crisis of 2007. And the reason why I call it the crisis of 2007 is because that's when it became really obvious that there were big problems. A full kind of year ahead of the big collapses. And where I saw it was short-term interest rate futures and credit default swaps. So banks lend money to each other, and there's an overnight rate. And you can look at a contract that represents the price that they're paying between each other. And that contract is normally pretty much what base rates are. So if base rates are 5%, it should be around that level. The way the contract works is, if you take 100 and minus the interest rate, that's where it trades. So for example, if interest rates are at 5%, it would trade at 95 because it's 100 minus obviously the 5%. And this contract was collapsing. It was trading at sort of 93, 92, and then 90. It was saying that the rate of interest between the banks was going up to extraordinary levels where normally an arbitrage trade would be simply to buy one and sell the other because it should be at 5%. But what it was actually saying was that the banks didn't want to lend to each other. And therefore,
at any price.
Not necessarily at any price, but at a raised price. And so it was the first sign that there was problems in the system. Now, we could go back a little bit further and we could look at what's called interest rate cyclical stocks. Interest rate cyclical stocks are stocks like the housing stocks and the banking stocks, both of which topped out or were starting to top out between 2005 and 2007. And so there were signs that things were going to turn down in those sectors anyway. And this was, again, ahead of everything else. Then there was a third thing, which was what's called credit default swaps. Very, very, very bad contracts that effectively, let me explain what credit default swaps are. If you own a car, you're not actually allowed to insure your car twice. It's illegal. So you can insure your car once, and then obviously if something happens, you claim off the insurer. But with credit default swaps, these are contracts that are the equivalent of insurance for debt, for government debt, but you can multiply the amount of contracts that you can take to the point where you can have huge short positions in government debt using credit default swaps. Now, the cost of this debt, the CDS costs, are tracked. And what we were seeing in 2007 going into the crisis was a wave of interest rate cyclical stocks out of the blue when everybody was talking about how brilliant the markets were and how it was a fantastic party and they didn't want to hear anything negative, which we come on to probably in about a year's time, according to the cycles, according to Akhil. But we can come back to that. But at that time, everything was moving up very, very aggressively. The sentiment was very aggressively bullish. But these credit default swaps were starting to blow out, and the cost of the insurance effectively was blowing out. And I remember looking at Iceland's insurance, and it should be trading around 100 or 200. It was trading around 3 to 500, as of like an example of where it should be and where it was. And if you tried to talk to anybody about it, they would say, "Oh yeah, that's just wrong. Don't know why it's there." And it was that, but that was telling you that there was problems in the system. So interest rate cyclical stocks are usually the first, property stocks, or anything to do with interest rates moving up being a problem. You can look at gold and silver, although they can react differently and strangely, and every time can be different, because sometimes people sell gold and silver in a crisis and it might react badly, and then it goes back up again. But certainly that's got to be something to look out for. In currencies, you'd normally look at the Japanese yen and the Swiss franc and the US dollar. Those three are would be the ones that people run for cover. So US dollar, because if there's war, biggest superpower. If the Swiss franc, because they're independent, and the Japanese yen, because when everything's going up, the Japanese yen is used as a funding currency. Well, this was when interest rates were at kind of normal levels. I suppose they got sort of back to normal levels, but Japanese interest rates were always very low in order to try and induce some inflation into their system. So what that means is people would borrow, or funds would borrow money in Japanese yen at a very low rate and then invest it somewhere else. So you could in fact borrow in Japanese yen at a very low interest rate and say invest in South America, where you're getting a very high interest rate on your bonds. So they do that in huge amounts, and when the system's okay, they make a lot of money. The problem is when things start to go wrong, people sell their assets, and the Japanese yen, from people being short, they suddenly have to cover their positions, and that starts to go up. So watching the Japanese yen and the Swiss franc, and obviously the dollar as well, as warning signs that there's a crisis. So there's a few things you can see, and that's why it's quite amusing when people say it's come out of nowhere, and the Bank of England don't seem to really track things like that, because they were completely caught off guard. Surprisingly, I don't know why they weren't even watching the bond markets. I mean, that seems incredulous to me, but the reason being is they tend to be economists. They've got a degree in economics, and economics is not the markets. Economics is a theoretical, in my view, a theoretical study of how it could work, but actually it doesn't work. It's never worked like that. And there's some very good economists out there who've kind of worked it out. I call them market economists, and they put the markets and economics together in a way that makes sense to them. They kind of read between the lines in a logical, well thought out, well reasoned, market reasoned way. Clive Thompson's a great example. I just saw him on LinkedIn saying that he thinks that the CPI number in America is going to be higher than expected. That's a very market economist type thing to say, because it's kind of forward looking. But most economists look at data that's already passed, GDP or data that doesn't really make any sense about where the market is going next. I remember talking to a top city economist during the crisis, and he was saying, even whilst it was clear that there was so many problems around, he was saying there can't be a crisis because non-farm payrolls haven't gone up. So if anyone who's run a business will know that just because there's problems, you don't immediately fire people. You can probably hang on a little bit and see how things go. And people are generally very hopeful in their positions and in life. And so it takes a lot of money to hire good people as well. So you can't just fire people straight away as soon as there's the first sign of problems. So it takes a while for it to work its way into the system. And of course, by the time it has worked its way into the system, the markets have moved on. I mean, they're almost ready to go back up again by the time the economists work it out. So it's a very interesting question, but I'm sorry if that was a bit long, but it is such an important one, and one that I think is going to become crucial. What Tim is been readying himself for and kind of warning about maybe be upon us much quicker than we think. And a year's going to go past, even if it's a year or 18 months, it's going to go very, very fast, isn't it? So I think being prepared early is much better than not being prepared at all.
Yeah, if you're going to panic early.
Well, yeah, I mean, how's it been, Tim? How's it been working through psychologically when not so long ago it was pretty tough being in the field that you were in?
It's there's two things that have been problematic. The first is that the sort of the precious metals have taken way longer than we ever thought possible for to really break up. They seem to be breaking up now in terms of technically. So that what was resistance now seems to be support levels. The other thing that's been problematic is that value as a strategy has basically underperformed for as long as I can remember. So since basically '09, growth has completely dominated in performance terms. So with hindsight, you only needed to make one decision, which was basically buy the US and forget every other market. And if you want to refine it, then buy NASDAQ and forget every other part of the US stock market as well. But I think my sense is that having outperformed for so long, that whole big tech growth story is now starting to roll over. I was having a look, for example, at Tesla, which was sort of the absolute darling of the market, but Tesla's halved over the last 2 years.
Yeah.
So I don't know whether you have any technical thoughts in relation to Tesla or tech more generally.
Well, there's a few that are still going up. Nvidia.
I mean, Nvidia being one of them.
Nvidia, I thought was sort of overdone, and it broke out. It gave a buy signal recently again, which is just crazy. But Tesla, I thought, was an interesting one because I think it's come down to this green energy thing that. It's very difficult just to say that we get flack because we were talking about how electric cars couldn't really fulfill the role of petrol cars, and across the board they're good for certain things. But we got a couple of comments. I got a couple of comments about it, and I know the majority of people don't. That doesn't represent the majority of people who listen to the podcast, but you do react to those, and you shouldn't really. But it was like, oh, you don't get electric cars, they're just brilliant. I mean, every single cab ride I have with someone who's got an electric car, I quiz them. I really quiz them about what it's like and what the range is like and all that sort of stuff, and how it works for them. And this is in London, and the bottom line is that it was pretty clear that they can't. There isn't the infrastructure, and that it's now being discovered that they've overestimated the ranges and things like that. If you understand battery technology, you know that they don't work well in hot weather and they don't work well in cold weather. Those are the two parameters. And that's when you're going to be putting the biggest load on your power source. So those things, this whole green energy thing, is whether it's well-intentioned or whether it's some form of corruption or I don't know what, but it just seems so badly thought out. And it's indicative of what you were saying earlier about the whole area of crony capitalism that seems to pervade so many other areas of our lives that it just takes independent thinking to work out what one should do next. But I think that's been part of the problem with Tesla. And also there will be a certain amount of competition from other companies. They were at the forefront of it, but it would only take, I think there's a Chinese company called NIO. They've got much lower production costs, and unless the US steps in to stop imports of foreign made electric vehicles, Tesla could be in trouble. They do need to diversify. And I was listening to the Joe Rogan podcast with Elon Musk, and obviously super smart guy, much smarter than I'll ever be, but he was saying that electric cars the range isn't a problem and it's a production issue. And I find that quite extraordinary, because it can't be the range, even if the range is sorted out, who is going to spend 30 minutes in a service station filling their car up? It's just not going to work. That the technology is not there yet. It's very good for certain applications, but it's still not there yet. So I was quite surprised that he said that. So I think there's quite a few reasons why Tesla might be going lower. I think if Apple made an electric vehicle, that would be very interesting. And I think people with their brand reputation for well-built products, that might see the stock price, just because you've said electric vehicle, go through the roof. But yeah, I mean, it's not looking good technically at the moment. That's for sure. But let's see if we've got some more questions. So someone's saying, John Smith, hello, John. You're saying, is this being recorded or released as a podcast? Well, it's going to be both, really. We're out live. It is recorded, but I will edit out my fumbles at the beginning and, me drinking and stuff. I'll probably take the video off. Actually, I haven't recorded the video, so that could be a good reason why there won't be any. So that's that. We've got a difficult question from Red on White, which I'm a bit worried about reading because I don't think I can answer it, but I want to give it a crack. So he's saying, if you could program your own cryptocurrency, what would your unbreakable rules be? I don't know. I don't know if I could come up with unbreakable rules. The problem is with quantum computers that they will be able to crack pretty much every key. So I'd have to have a think about that, really. I think it is brilliant technology, but I think we would have to design something with a quantum computer that can't be cracked. So some kind of quantum style, and I don't even know whether this is a thing or not. I don't want to sound like Terrence Howard. I don't know if you heard it. Did you listen to his podcast with Joe Rogan, Tim?
No, not yet.
Oh my God, no! I wouldn't. It was gobbledygook, basically. I mean, I listened to the whole thing, but there was no science in there whatsoever, from what I could gather. But anyway, I don't know is the honest answer. I'm not really sure what the rules would be, but I'm a firm believer of using technology to further technology, as it were. So I think the answer for something that's unbreakable will probably come from the study of quantum computers, which I haven't done enough of to truly understand them. I understand the concept, but I don't understand how to program them. So let's have a look. Is there any more questions? I can see something from Tim. Debt is one. Oh no, you've said that. Now we've also got a couple that was sent to you on Substack. But before we get to that, Tim, I mentioned the word war earlier on. And do you think that the behavior of the US is one that is true? I mean, it's so extraordinary. Do you think that they're trying to goad Russia into some form of war, or do you not?
It does seem to be that way, doesn't it? Because I can't remember a time in my life when nobody seemed to be interested in a peaceful solution. Normally, every time there's a conflict, there's peace advocates, trying to do deals, and right now they don't seem to be any of them out there. So if they weren't deliberately looking to start a fight, they're certainly behaving like they are. And the idea of conscription is also really just so sickening. Yeah, I mean, it's one thing we talk about with pretty much all our clients, and they're saying there's no way on earth I'd allow my children to fight in a clearly sort of confected conflict.
Yeah, same here. I don't get it, really, and especially with all the kind of gender nonsense that's been promoted and all the sort of the marginalization of the white male that's gone on. We're responsible for everything that's bad, and then you think, I'm going to send my son to war for what? I mean, you can't break down the identity of multiculturalism. Very happy with it, and I think everyone should be as they want to be. But again, it's what you've been saying about how the government seem to get involved with all these things and push all these agendas that naturally no one has any issue with anybody. Well, I say no one. The majority of people are very tolerant and quite happy to have lots of different views, lots of different people in society. But when it becomes a kind of, you must do this and you must have a certain number of people of whatever persuasion it might be in your company, rather than the person who can do the job the best, things don't just stop breaking. They break down. I mean, what is the point of hiring someone who isn't the best person for the job? That should be the only reason. So it is all rather odd, really. You can feel disconnected from government and government messaging, because they're pandering to a small group of people trying to be woke, for the want of a better expression, but they are, and they think it makes them hip and cool, and maybe it does to a certain extent among the campuses in certain areas, but not across society. Absolutely not across society. And I think that
Big man Ting is asking how high gold and silver 2025. Sorry to cut in, Paul.
no, good.
Um,
No, cut me in. Cut in. That's
so
fine.
I'm not going to put a target on it, but just for reference, the two prior commodity bull runs that we've had, the 2000 to 2011 period, gold went up 7 times. In the 1970s, it went up 20 times. So I think something between those extremes is perfectly possible for the next few years.
Yes. I don't, from a technical point of view, I never put targets in, because the markets can always go much further than you expect. And it's really how it does it and what the sentiment is. I'd be very interested in speaking to a gold dealer to see whether people are buying at this point, or whether it's quiet. And my guess is it's still quiet. It's a bit like what Glenn Goodman was saying about Bitcoin. It's very quiet, even though we're near the highs. And usually you'd hear a lot more noise about, partying and bullish sentiment and what have you. A good way for me to start with the contrary opinion theory stuff about when we're approaching the top of gold. I remember the last sort of the final phase of the bull run. I was on a trip in Poland and discussing how we were approaching the end of the bull run of gold at that point, and he told me that the flight that we were on was owned by a company that sold gold, was a buyer and seller of gold, and they came out of nowhere and they created this airline, which promptly went bust. I have to say, this is a good few years ago. But it was signals like that, the adverts you get, we will buy your unused gold and stuff. I've seen one advert and that's it. So things are still very quiet on that front. And to be fair, when you get a massive bull run in any sector, you do need a synchronization between all the metals, or in my view, in the tech view, to have a confirmed bull market, everything should be going up. What's interesting is platinum is starting to move, and palladium, which previously weren't moving. Silver is playing super catch up, which Tracy Schuchert, who was on the pod not long ago, was saying that was her favored metal. She loves silver more than gold. Tim, would you say you love silver more than gold, or are they both equally in close to your heart?
We expect to make more money out of silver, bluntly.
Okay.
And I think the thing that appeals to me about silver is that it kind of hedges you against a lot of different sort of outcomes. So we like gold and silver because they have a monetary history. In other words, they've been money good for thousands of years. But gold doesn't really get consumed, whereas silver does, because it's an industrial commodity. And not only that, but it's also integral to the so-called green revolution. So you can't have a sort of a green dream without the role of silver. So silver is a great hedge against that. I mean, I'm not saying I believe in all things green and net zero, because I think a lot of that's nonsense. Nevertheless, because enough people do believe in it, and it's probably not going to go away. Silver is a great way of getting exposure to that, and also having a kind of monetary hedge as well. So I think the on a ratio basis, silver looks extraordinarily inexpensive relative to gold.
Yes.
Because it does get used up. You can't have an iPhone without silver. You can't have anything really in the modern economy without silver. So it's a wonderful way of having sort of like 2 bites of the cherry.
It's also the best conductor of electricity, and it has an antibacterial purpose as well, which is,
so it's a miracle thing.
Well, it really is. It's phenomenal, and it's a hell of a lot cheaper than gold. You could buy a kilo of it without too many problems. But I guess that's also its pluses, its minus in terms of its weight, because you'd have to have a lot more silver to carry a decent amount of money around.
Sure.
And I suppose that's why why gold becomes more popular. But then again, you could say that about platinum, because platinum's more expensive still, isn't it? Or maybe it's not now. It was a while back. But yeah, so I'm just going to have a quick look. We've got Johan saying we should have stated our pronouns. Yeah, that's very good, very funny. That's a whole area of society that seems to have really not made any sense at all. I mean, there's a lot of people scratching their heads in the same way that you can sort of scratch your head about markets not making sense for a bit. The whole polarization of, it's almost like they're trying to push people towards civil war. And I don't know whether this is a sign of the times, but there really is a very strong divide between left and right, like stronger than I've ever seen before. And it seems like nobody, the right is being vilified in a way that I just don't understand. I just can't understand how this is happening, or why it's happening, or as an example, J.K. Rowling and how she's being treated. It's absolutely fine for people to throw death threats at her, and that all gets ignored. But she's never said anything, as far as I can see, that has been against trans people. She's just tried to protect women, and that seems to be all there is to it. And if there's, unless she's tweeted something the last sort of 6 months that I haven't seen. But it's just extraordinary how the majority of people would probably agree with her, but you're not allowed to. Crazy, really is crazy. But anyway, back to the markets. What do you think will be the signals, Tim, that we've got silver and gold going up? And Tim Parker obviously asked me what I'd be looking for as a sign. Government debt could be one, couldn't it?
Yeah, I think for me the most likely trigger for a disorderly market that would basically be a sort of explosion higher in treasury yields.
Right. Yes, and that would actually follow on. And then, do you think the crisis may play out in a way that there's usually a wave, isn't there? The first wave is that stocks go down. When stocks go down, usually bond prices go up because they exit their positions. They've got to put them somewhere. Where do they put them? They're not going to run to gold immediately. It's most likely they're going to put their money.
But what is intriguing, I saw a chart that someone had put out a little while ago pointing out that treasuries are now more volatile, particularly on the downside, than gold. So treasuries are, I think, even as we speak, are losing safe haven status.
So, sorry, Tim, I was completely distracted by, I was reading a comment. Could you just repeat that, please?
Yeah, someone put out a chart a little while ago saying that treasuries are now more volatile, particularly on the downside than gold is. So I think treasuries are in the process of losing their safe haven status, which is a thing we were talking about earlier, of course.
So you think the first sign will be long bond yields just going up? And
quite plausibly, that would be my first port of call for what could trigger a conniption fit in financial markets, higher treasury yields, because it would reveal that the Fed has got no real strategy. It can't credibly cut rates, and clearly, it can't credibly hike them either. So they're completely frozen.
Are there any countries that are doing it right, do you think? And that's a hard question, Tim. I'm sorry, I put you on the spot there a bit. But
in terms of countries that are generally doing the right kind of things, that would normally include the likes of Singapore and Switzerland. I can't comment for their sort of fiscal status at the moment, but in every other respect, they seem to have the best run economies in the world.
Yes. When it comes to just to circle back slightly to when we're talking about the analysis of countries and companies, and price to book and price to earnings ratios. One of the things, you see, it all sounds very easy, but you need this extra bit of skill, which you have, which I definitely haven't got. And that's the ability to read company accounts. And obviously Warren Buffett just loves it, which is why he's he loves his work. Apparently, he just loves reading company accounts. And even in the David Dremen book, it was, yes, price to earnings, but you've also got to know all this other stuff. And it was almost like, oh, okay, so it's not as simple as it being cheap, like, because anything can be cheap. You still have to look at the company's finances, right?
And one of the things that we're looking at more closely now than we used to is margins. So ideally, the time to buy is when the corporate margins are close to their absolute low, and in other words, they can only go in one way. And then when margins start to expand again, the share price should respond positively as well.
But see, this is so interesting. How do you know that those margins aren't under pressure and will remain under pressure?
It's a very good question. You just have to kind of do sufficient homework that you're not taking a sort of stock specific punt or a sector specific punt, that there's, you're banking on the fact that nothing is fundamentally changed for the negative. And
Right.
sometimes of course it will. So sometimes technology will change, sometimes the competitive landscape changes, or just the whole nature of business changes. So I wouldn't want to invest in a newspaper now, for example. I don't want to invest in anything to do with legacy media.
No, definitely not. I mean, it doesn't seem to be. It seems very hard to look. I know just from anecdotal. I subscribe to a certain newspaper, and I won't say which one because it's really not fair on them. And they gave me a bonus subscription, and I literally couldn't give it away. I was like, it was very hard that, and for good reason, really. I just think, I say for good reason. That's not strictly fair because there are some great journalists who do a fantastic job, and a lot of what gets put out is an editorial decision. So even if you decide you want to write a story about X, it doesn't necessarily mean that that's going to go out. Even if it's the best piece of work journalism that there is, it's all down to what your editor says. Otherwise, it'd just be in the waste paper bin. But that's also why it's so interesting that technology has allowed so many other flowers to bloom, as it were, to use the expression that's often cited, with things like Substack. People have there are many people who've come off legacy media and are extremely successful, making a very good living, just from being on Substack and going direct. And that's a real. It's a real disintermediation of talent, isn't it? That's kind of what technology's done. If you're talented and you're making money for a company, you could be talented and just making money directly yourself. But obviously, you need resources. And I have a friend who works for a newspaper who says that sometimes if you're doing an investigative piece, it can take a year's worth of time with a team of 5 people or more to uncover a story. How can you do that without financial backing? So it's a difficult area, but things have changed a lot for sure. So we've got so Crypto Guru guy says if margins are down, nonsense logic. Now, well, what it's saying is I heard that for the first time, Tim, and I just read it as if margins are going down and the company is good, it's approaching a turning point. That's how I read it. I mean, yes, it's obviously not a positive thing that margins are going down, but it's an indication that that it is approaching, well, as I say, a turning point. But yeah, it's not in itself a positive thing. But coming back to actually reading financial, company balance sheets and company reports, is that something that you actually do in a Warren Buffett way? I just imagine you squirrel away.
My colleagues certainly do.
Yeah. Okay. But do they send?
So there's a screen on Bloomberg FA Financial Analysis that has all these things on a sort of time sequence. So we take that stuff very seriously.
So you don't have loads of, you don't print out all the company reports and just go through them and then decide, right, this is the one, or yeah, we would invest in this, but I've just found something that I don't like, something's off balance sheet, or I don't know, some IP or whatever that might be that has been that's flattering the accounts. I don't even know because I can't read company accounts, but is that the sort of thing you might spot?
Well, like I say, the primary thing for us is basically ensuring there's plenty of cash flow, because you can fake earnings and revenues to an extent, but you can never really fake cash.
Okay, yeah, that's interesting. That's an interesting thought. Yeah, a crypto guy says, yeah, it might never recover, but I suppose it really depends on what business you're looking at in the first place. I mean, you start off with a macro filter, don't you? I would have thought, Tim. I don't want to.
It's a bit of both. So, I mean, my tendency is probably to say, is look at things from a top-down basis, but my colleagues on the other hand will be looking at it from a bottom-up, and hopefully we can meet in the middle somewhere sensible.
Yeah. I mean, it's an interesting question. I think maybe crypto guru guy, when you're looking at cryptocurrencies, how do you value them, and how do you value businesses within those sectors? I think it's incredible at the moment that you've got. It's very indicative at the moment that you've got coins like was it Pepe and what's the Elon Musk one? It's gone out of my head for the moment, but
Dogecoin.
That's it, Dogecoin. I mean, you've got meme coins that are moving in in a crazy way, clearly worth nothing other than there's nothing behind them at all. You know, you may as well take a punt on a company than a meme coin. But from a technical point of view, yeah, great. I would buy them because they're going up, and that's all there is to it for a trend. But it reminds me very much of the run up to the .com crash, where you had many companies that were just worthless with just .com after them that were doubling, trebling, quadrupling, and everybody was buying and really enjoying themselves with this party. But it was clear that it couldn't last, and that's not said with hindsight. It was just clear that was the case, because, and this is a sign at the moment, and I'm not saying that it's going to stop tomorrow with cryptocurrency, but it will, and I think those will be the first to go down. So going back to Tim Parker's point, that's another one I think I would notch up. I would be looking at any of the meme coins and pressure on the meme coins, because those have got to be the first ones that you sell. And for those of you that don't know what meme coins are just cryptocurrencies or crypto tokens, I suppose you'd call them, that have absolutely no business behind them at all. So they're not even pretending that they're there to make money. They just exist because they've got a cool name, and they are trading at many multiples. So
well, I'm still waiting for William Shatner's Shat coin.
Well, I think we've got to make Shat coin, and I think that goes back to was it Red on White's comment about what I would create? Shat coin would be definitely the top of the list. It'd just be hilarious. So let's see. Bitcoin lacks money requirements. So Don Juan saying Bitcoin lacks money requirements like a wide and deep wet network. Gold has. There's a heart in the way of my thing. I can't read the rest of it.
Gold has that and everything else.
Gold has that and everything else. Well, there will come a time when I think real assets become very attractive. And at the moment, it seems like Bitcoin and gold and silver can coexist very nicely. And there's going to be some great technology that comes out of it. We have to remember that I would highly recommend Tim's recommendation of buying a copy of Sapiens, because you see how we've got to the point that we are at now. At one point, being able to write and record anything at all was amazing technology. I mean, it sounds incredulous, doesn't it? But that's the truth. To be able to just record transactions was an amazing technology. To have, until we've got to the point of cryptocurrency, to have a trustless network, that didn't exist. So that it is amazing technology, really is. And quite why it's not used for elections, I don't know, because that's a perfect application, in my view, of how it should be used. But it's why cryptocurrencies are going up so much, because it really is a sea change. And in the same way that the internet was. At the beginning of the internet, it was seen as a place for money laundering and nefarious activity. And then people realized that actually you could do business on the internet, and then it became more credible, and then look where we are now. So these things will go in phases, and I think we'll have a .com style cryptocurrency bust, as it were, and then all the weak companies and weak projects and whatever they are, they'll get shaken out, and then going forward into 2035 or whatever it will be, we'll have some very interesting companies and cryptocurrencies that are taking over the world. And it may well be Bitcoin. I don't know. It's such an interesting time. It's very difficult to know. But one thing I would say is that I think Taleb's been quite quiet on Bitcoin, and maybe he'll have the last laugh, maybe he won't, but he certainly was very negative on it, and it's gone very much against him. So when trust has collapsed, what will be trusted, gold or Bitcoin? Yeah, I mean, that's a really good question. It is such a good question. I would say, and obviously we're going to get Tim's point of view, but in any film, in anything that's exciting in terms of drama, you never see people going after, well, I suppose there's the odd one with cryptocurrency, but everyone's looking for gold, aren't they? So gold has this timeless quality about it. And in a crisis, we just sort of automatically default to it because it never tarnishes. It will be there effectively forever, and that's how we see it. I don't know whether that's enough, and I don't know whether we're just programmed to think like that, or whether it's just this weird psychological thing that human beings just want gold. But I don't think you'd find many people saying, no, thank you, I don't want your gold. And under many circumstances, maybe in the Sahara Desert perhaps, but other than that, I think people would really want gold more than Bitcoin to a certain extent, because the value of Bitcoin can crash. Yeah, the value of gold can crash, but Bitcoin, I suppose, could become worthless. Gold is very unlikely to ever become completely worthless, even if it just because of its industrial. It does still have an industrial use, not more than silver, but it does. It's a tricky one, that really is. But the nice thing about Bitcoin, and it's something we spoke to Dominic about. I don't know if you remember that, Tim, but Dominic was saying that, I mean, he obviously loves Bitcoin and is a big advocate for the precious metals as well. But the interesting thing about Bitcoin is you can send it to people. You can use it more easily as a form of payment. But I think you've got a counter argument to that, haven't you, Tim?
I accept the convenience thing for sure, and the monetary transfer. But ultimately, I just as you say, let 1,000 flowers bloom. I think they can both comfortably coexist. So there's no reason to take a sort of either or approach. Just to have both.
But you can use gold as a form of payment, can't you? You could have I know we've had someone on the podcast who's talked about a gold credit card where it's fractions of gold that you. So it's effectively it becomes a payment system. Yeah. So it could be either, really. But I suppose the big question is, which currencies will collapse the most? And that was another. I've just had this wave of nostalgia come over me, going back to the global. I suppose nostalgia is not the right word when talking about the global financial crisis, but just thinking about the currencies were getting knocked out big time. Sterling was collapsing, the euro was collapsing, and the Polish zloty. So any sort of peripheral European currencies were collapsing. So like an individual Eastern European country, like the Czech Republic, for example, the Czech koruna, the market realized that a very small country would be extremely vulnerable to a crisis, and they would be selling their currency very, very aggressively. So the question is, I suppose I answered it before, but which currencies would you flock to? And it always ends up being the Swiss franc, the Japanese yen, or the US dollar.
I'm not so sure about the yen now. I think the yen, again, because Japan's in such a parlous state of indebtedness, I'm not sure the yen trades like like a safe haven currency anymore. So I would treat yen weakness as another sort of sign of imminent Armageddon.
Yes. Sound money is a must for. So this is Crypto Guru Guy who has been very active. Thank you for your comments. Sound money is a must for society, but is gold price manipulation by banks? I suppose he's saying, but the gold price is manipulated by the banks. Is it? Do you think it's manipulated, Tim?
I think ultimately everything is to a certain extent, but I think I get the strong impression that there are only so many games you can play in the paper market, and in the meantime, the real asset is migrating capital, and the real asset is migrating over towards Asia. So you've now got effectively two gold markets. You've got paper gold in the likes of COMEX, and you've got real gold in the likes of the Shanghai market. And the Chinese prices are way higher than the ones in the States.
Are they really? I didn't know that. By how much? And is there not an arbitrage opportunity?
I don't know. So, for example, there's a pop quiz that we used to use with all our prospective clients, and it's a 3-question series. Which country in the world mines more gold than anybody else?
Well, China.
Which country doesn't allow an ounce of its gold to be exported?
China.
Which country has advised all of its citizens to accumulate gold?
Now, have they really? They've actually advised.
They've explicitly said that, and it's now starting to happen anyway because of price momentum and the fact that people are increasingly distrustful of, say, property, and I guess to a certain extent banks. So the Chinese are sort of rediscovering the merits of gold all over again.
Yeah. Is property in China a problem, do you mean, or is it a general property problem?
It's a general problem, but I think specifically there's a few things sort of, there was a huge property boom. And I think the intriguing thing about China is it seems to be going through what sort of Japan experienced throughout the 90s. And it's just happening with a big lag. So, I mean, we don't invest in China for any number of reasons, valuation being one, and sort of the what would you call it? Let's say culturally.
Political.
Exactly, geopolitically and all the rest. But I think that the Chinese property market is not in glowing health at the moment.
We have a very weird system, to put it kind of simply, in the sense that you've got
capitalism with Chinese characteristics.
Yeah, once again, you put it the best way. It really is. And so, for example, when it comes to property sales, you can't sell your property lower than a new build, somebody was telling me. Now, this is all anecdotal. I can't back it up. I don't know. It's just somebody was explaining that's the sort of system they have. So they will impose restrictions on how and when you sell your property, which makes perfect sense about what you're saying about gold. But it's intriguing that they ask their citizens, or they recommend that their citizens buy gold, because it's almost an insurance against what they're doing, right? And that seems like an odd thing for them to do. It seems like more likely they would want them to invest in property in areas where they've overbuilt or that are struggling or whatever. So it's that's kind of a fascinating thing that they're doing that. But let's just see. Yeah. So going back to our 200th, it reminds me that Jonathan Morrow had mentioned that he remembers our 100th, which was with Luke Johnson. I remember that.
Yep.
I remember that very well. It was an intriguing podcast and a very special one, really, because, well, of course it was special, but they're all special, aren't they? But that was a particularly fantastic one because, him being a big name in business and a magnate of the Pizza Express chain, that was just great. I really remember that very fondly. But it's also how quickly time goes. Now, somebody mentioned I'm going back to an earlier comment about the quantum, the quantum computer system, the banking system, which was one of our stranger podcasts, I have to say. It was one of our...
We've covered a lot of ground.
Yeah. Well, look, what I like about our pod is, I think in many ways the spirit of it is very similar to Joe Rogan's approach dare I say it, in that I like to listen to lots of different views. I don't ever assume that I know something 100%. And it's nice to hear, alternative views. And sometimes those alternative views can be a little more fringe than perhaps you'd expect. And also you can't really account for an individual's perspective sometimes. So some people see things in very different ways. As we know from science, people's brains are wired differently, and it's not that people are being disingenuous. They might see things or think things that and perfectly believe them to be real. They're not trying to be dishonest. They're telling you the truth as their mind sees it, but it just might not be as we see it. So it was one of the more spicy ones, as it were. But we got Richard Mead with a question. How do you value dividends? E.g., if a company is paying a big dividend, is that a red flag? Now, I'm trying to think of an answer to that. I don't. Would it be? I suppose it'd be why, whether it pays one off as a large amount compared, and why they might be doing it. So if they're selling off assets and paying a dividend, that's really bad. And I think
if they're borrowing to pay a dividend is also bad. I mean, I think what matters is not so much the level of dividend, but how much it's covered. So if it's covered by earnings, then that's fine. But if it's basically if the company has having to borrow to maintain a historically high dividend, then that's absolutely a red flag.
What would be a good dividend cover in your view? 3 or 4 times or something?
3 exactly. Started probably three times covered.
Mm. And are there any industries that you just point blank don't go into, or does everything start from value?
At the moment, we don't. We're probably unlikely. It's unlikely that we'll own banks for the foreseeable future, just because it's impossible to really get to grips with the balance sheet issues. And you look at some of the annual reports for some of the larger banks, and they run to like several hundred pages with the smallest font imaginable, detailing all these side issues as well. So
no way.
It's just a bit too difficult for us to analyze. So banking would probably be one. That's not to say there aren't good banks, just that we struggle to know exactly how to value them.
Are you exaggerating to make a point, or is that really?
No, really. I think I'm right in saying that. I think it was maybe Deutsche Bank, which clearly has been sort of among the walking dead for longer than I care to remember. And I think at one point it had an annual report that ran to 600 pages. But no one's going to read that, including the CEO of Deutsche Bank. So it's all just magical thinking.
Yes. Well, the Big Short is a great film to watch if you're ever wondering about how the banking system can be manipulated and how very, very clever minds create contracts that can just cause a whole lot of problems. And Warren Buffett said it, didn't he? He said derivatives are weapons of mass destruction. I think that was what he said, but something along those lines. But it's absolutely true, and it just reminds me of a very, very interesting point that was made in David Dremen's book, and it's one that relates to liquidity, and that's, I think, the most important thing that you've intuitively or maybe directly addressed with your positioning that people don't think about. And again, that's something that Warren Buffett talks about. Liquidity is the most important thing that you can have in the system. That was what was going wrong in 2007. There was no liquidity. The banks wouldn't lend to each other. And at some point, leverage eventually turns into a liquidity problem. Leverage always turns into a liquidity problem. It was like an aha moment. The more leverage you have in the system, I mean, we know that markets crash, right? And it's Taleb's book about the Black Swan and his brilliant books. I mean, I have to say, I'm really sad that things have changed in the way that he operates. But he really was a hero of mine. But the way he looked at the statistical modeling of economics and how it just didn't make any sense at all, saying that you couldn't have a crash, or you would only have a crash in once every 10,000 years, when we observe crashes very regularly in the markets. It didn't make sense that that's what the economists were saying. But it also makes the point that, or, you know, in reading this book, it just made the point, the more leverage you have in the system, the more a crash you will have at the other side. It's almost like whatever you put in is what you will get out at the other side. So and I see it in the markets all the time, the way they go up is the way they crater. Look at Tesla, for example, the way it's gone up, it will make a pattern and it will crater. And that's kind of what technicals is about. You see this balance, but it's almost like when the system has been geared up with leverage, and we will see that leverage probably getting more aggressive in the next year or so, there's always a price to pay. There always is at the other side of it. And it's just that party feels ever so good while it's happening. And when it starts to turn down, you're seeing a liquidity problem because there's too many sellers, not enough buyers. And it's that buying power has been caused by the ability to leverage your positions, whether it's in property or whether it's in stocks, whether it's in cryptocurrency. Those are the signs, again, loose banking terms for buying property, but also trading and investing. Those types of loose conditions, they always cause a crash on the other side. And that was the 87 crash was caused pretty much by that. But it was what was interesting about the 87 crash, it was more down to the leverage that was invested in S&P contracts and the stock market and some other things that we won't go into, but basically it was just one sector as opposed to everything. And where we might be heading in this next crash is more of an everything bubble. So it should be bigger. In 2007, 2008, we had stock markets, booming, and we had property booming. So you had those two things. I think that the introduction of cryptocurrencies has created this other market with which speculation can run rife. And make no mistake, there will be some form of crash. There has to be. It's just a question of when. And as Tim Parker was saying, there's a few signs that you need to look out for, and it's extremely important. Dance near the door is a great expression that I've always remembered from you, Tim. So let's just see. There might be fiat printing is leverage and corruption. From Don Juan, I totally agree. In terms of government, the way is there any form of government that can work, Tim, do you think?
As small as possible.
But so how would you say that having someone in power my big problem with the way government works is you have someone in power for 4 years and then they get elected out and someone else takes over, and it's always passing the baton of the problem. And it's not long enough really to get to grips and to sort any problems out. So would you advocate, I know you don't like either system, right? But would you advocate 4 years as it is now? Or would you say they need to stay until the job's done and whoever you elect should stay in for 10 years or some extended number? Because it seems like there's problems with both, and I don't know which is worse.
I'm not bright enough to know what the answer is, I'm afraid. I think we can probably both agree that there's something gone desperately wrong with the system, and we now have sort of the uniparty on both sides of the Atlantic. So it doesn't really matter which way you vote, 'cause you're getting nonsense policies anyway thrust down your throat. I just know that something has to change, and I hope it does, but I'm not bright enough to work out what it should be.
Yeah, I feel it's some sort of skin in the game, because the problem with politics is once you've become prime minister or held a senior position, you can then become fabulously wealthy. Not that I've got any problem with people becoming fabulously wealthy. Good luck to them, if that's the profession they've chosen. But
I think the first thing I would insist on is getting to grips with sort of lobbying power. Just have a blanket ban on basically political lobbyists.
Yes.
I don't know how easy that would be to do, but at the moment it's just like every politician is for hire.
Yes,
I
indeed.
forget who was that said it, but they said they should say who funds them the same way like racing car drivers have their like brands all over them.
Yes, indeed. Um, so I think we had some questions which were put to your Substack. So I'm just going to switch over to that, and let me just do that now. So I'm, a question should be appearing hopefully on your screen, although I can't see it because I'm not watching it directly. Let's see. Um, can you see this question, Tim? Has it come up yet? I don't think it has yet. Let's just see. So
Oh, here we go. Here we
yeah,
go.
yeah. So you, I think it may be very similar. So do you want to have a look at that and tell us what your
Yeah, I
answer
wonder
would
if you
be?
could answer a question on pensions and the bond market. I've seen some very scary predictions online about how worthless a private pension could become in event bond market collapses, and that the insurance company providing that pension would also fail. I'm not convinced this is the case. Pensions in the UK also come with a guarantee, but wonder if it might be better to divert some funds currently going into company pension scheme into hard assets instead. Yeah, I mean, he's kind of whoever sent this one has read my mind. I think that the biggest problems are in large corporate schemes where basically you've got no say over what's actually in your pension. So that's going to be in probably 60-40 equity bond, mostly indexed. The beauty of the self-invested personal pension market is you can basically do what you like within reason to your own pension portfolio.
Mm.
So suffice to say that within my own pension, with my own SIP, I don't have any bonds, and I have much like our fund, I have a fairly high allocation to precious metals miners and bullion. And I think, given what we've discussed on this chat today, make it abundantly. I hope I've made it abundantly clear that I think this gold run, gold and silver run, commodities run has only really just started. So again, the two prior historical periods worth bearing in mind are the 70s and then the noughties, both of which the commodity run lasted for around a decade. So I think this has only just started. And it's in a sense, it's something you don't really want to happen, because a world in which gold is going through the roof is not a happy place. But at the end of the day, we have our own bed and we have to lie in it.
Absolutely. I've put another question up that should hopefully be coming up shortly, but I think you may have answered it already. But could you just have a look at what's on your
Yeah,
screen?
well, governments ban the private ownership of gold. I mean, we're not on a gold standard anymore, so logically, you'd think that there's no reason for them to do it because virtually nobody owns it anyway. Executive Order 6102 in 1933 made private ownership of gold illegal in the States, but that was when so that the world was still on the gold standard. And I don't think, in any case, any single person actually ended up being jailed for owning it illegally. Never say never, but I just think that governments will have bigger fish to fry than banning gold. Um, and anyway, so that's all really I can say on it. But of course, if it's the reason why if you like gold, you should also own miners, because they're a different form of ownership. So just a variation on the same theme. How long before Rome burns? I mean, I think Rome's already burning. But I think we just don't know what the accelerant to that process is going to be. If a new monetary regime occurs, will the West be part of it? That's an interesting one. So clearly we have this thing sort of BRICS 2 and the rise of basically the southern world, or the Asian world. Um, I think a form of monetary reset is going to happen, whether we like it or not. Ideally, it won't be CBDC, which I think will be a complete disaster. But people don't necessarily appreciate monetary systems change all the time. And a typical monetary system, I think, on average, lasts about 30 years. So the post-Bretton Woods fiat system that we've had since the early 70s is already very long in the tooth. So ideally, whatever does replace it would be hopefully a sort of like a global money with some form of commodity backing. That would be something I would favour.
Really? And um, how would a country do that if they are trying to let's say you've got country A that's backed by gold and country B that isn't, and country B that isn't backed by gold, its growth is through the roof. It's a bit, it reminds me a lot of before the global financial crisis. You had Lloyd's Bank that was not taking any risk and very risk averse. And then you had all the other banks that were taking a huge amount of risk, and Lloyd's was paying the price for that decision, that cautious decision, until the crisis hit, and then Lloyd's was in the best possible position, but then the government forced them to take over HBOS, which was almost completely pointless that they'd done what they'd done. It was just awful. But as someone described it, it's like, being given well, no, I won't go into that. Sorry, but anyway, you almost, the market forces you to become, because you'd be underperforming on a growth perspective, the pressure on you to unhook your currency from gold could be so great that you'd end up having to do it, because let's say you were in power, you'd just get voted out, even if it's the right thing to do. It's that short-termism thing. It's like a bit like, I suppose, what you've just been through as a fund manager. You've got your vision of the problems that are out there, and the market is now responding aggressively to that position. But beforehand, there's enormous pressure that you have to deal with that looks like, inverted commas, that you're wrong, but you're seeing everything that says that you're right, and more so as time goes on. Not just that it's staying the same, more so. How could a country ever do that? Because effectively, you would not be able to grow the money supply in line with business. It would be restricted, and that could be a restriction on growth that could be too much the other way.
Yeah, I mean, the thing about money is it goes where it's most respected, where there's trust and so on and so forth. So, what I'd like to think is plausible is that you have a system where there's, let's say, in part, just call it some form of commodity backing, because the problem with the totally fiat system is that politicians can't be trusted. So you need something to basically sort of kind of like, get them out of the way. And I happen to think that it's quite plausible that it won't just be one currency. It might be multiple ones that are linked in some form by, say, some form of hard backing, whether it's gold or oil or commodities more generally. Because we know what happens when politicians lose the plot, and ultimately the whole currency system goes to zero. So, having some form of hard backing is just in everyone's real interest. And if you look back at, say, the 19th century, we had a gold standard, and there was no inflation, and money held its value, and that didn't stop economic growth. So it's perfectly possible to have your cake and eat it in that respect. But clearly, as far as politicians are concerned, that a hard money standard means they can't print, they can't spend on boondoggles and all the rest. So politicians would not wish to operate in that world. But we don't want to operate in a world where politicians have the final say on everything.
So the question that was up, I've taken it off, but were there other parts to that you wanted to cover? I'm just putting it back up again, because I saw something.
I think we've touched on most. I think we've touched on most of it. I won't go on the topic of individual stocks, but as I say, to reiterate, I like gold and silver businesses. Silver probably has more potential upside, but they're both useful. What breaks next was the penultimate drop that caused the dam to burst. I just think it's going to be the bond market. I think it's going to be a shakeout in bonds. Whether it's the treasury market or somebody else, who knows? But I just think that an explosive move higher in yields would cause complete panic at the Fed.
So the writing's so small on a computer that's far away from me that I can just see something about Oz. Is that what is?
Yeah, not ammo either for if the proverbial hits the fan. What's an alternative to cigarettes as a unit of exchange? I'm not sure. I'm not sure we can answer this completely sensibly. So I think we'll pass on that one.
An interesting one is actually point 8. How long before the euro burst? That is one that is really trouble.
It's a hardy perennial question, that one.
Oh yeah, I mean, I've got that wrong for quite some time, because I was fully convinced that the euro was going to implode, and the reasons are because whoever was around during the putting together of the euro, you the amount of currency crises we had were just incredible. And these things go in cycles. So the peseta, the Italian lira, the Portuguese escudo, people have even probably forgotten those as names of currencies. But though they just collapsed, the speculators went after one after the other. And the problem with the way the euro works is it's always a balancing mechanism. A currency is a balancing mechanism. We saw it in the crisis of the late 90s when the Asian currencies completely collapsed. And it was because of property speculation and over leverage, as it always is, right? And the currencies completely collapsed because they were pegged against the US dollar. The US raised interest rates, and it caused this wave of collapses. But then the currencies imploded, which meant that money started to flow back into those countries, because there was a time when you could have gone to Thailand with $10 and lived like a king because the currency was so weak. And that is what rebalances economies. And the problem with the euro is that mechanism is
it's just not on the table anymore.
It's opaque. It's like you can't see it's like an opaque financial contract where you just don't really know what's going on under the hood. And it's so as a balancing mechanism, it's been taken away. Now, when economies are doing very well, you can get away with it, but it's only in times of crises that it stops working. And there was pressure on Greece, and that seemed to be dealt with, and it's all gone quiet again. So when the euro will go, I don't know. It's fascinating. I don't think it could have gone on as long as it has, because it seemed like we would have a crisis of 2002, 2007 and 8. I thought the euro, that was a prime time for it to go. You know, what an opportune moment, but it held together. And I guess we'll see in the next one. It's very interesting. There is another crisis coming. And just to answer the question that we've got from is it Bro and Ting? It's too far away, but sorry if that's wrong. But thoughts on moon cycles such as the 18.6 year astrology cycle for timing markets. Is it a fool's game or worth the research? Well, just talk to Akhil Patel and Phil Anderson. Those two names are the main ones in cycle analysis. And we haven't had Phil on the show, but we've definitely had Akhil on the show. And I would read his book. But, Phil Anderson has been very accurate in calling the markets. And what really opened my eyes to this type of research was when Akhil came on. I remember very fondly the podcast that we did together, because I was literally in a car in the south of France with my recorder and a microphone and my phone hooked up, because happened to be on holiday at the time, but I really wanted to get this pod done. And he was talking about the property market and how the property market would not go down during the COVID, whatever confected pandemic, during that period. And I just thought that was incredible. I really did not believe, although I'm a technical analyst and I think anything can happen in the markets, it seemed like property market was overvalued, and it seemed like that was the perfect opportunity to readdress the balance of what is inflated property prices, which have been obviously partly caused by the printing of money. And according to his cycle, that wasn't going to happen, and he was absolutely right. So my view is that what you really need to do is note who get things right and just do your own research. I mean, if moon cycles do predict market moves, whilst it may sound crazy, as long as it works, who knows? But the 18.6 year cycle, human beings follow cycles naturally. We have all sorts of cycles, And it's on average 18.6 years. It could be 20 years, it could be 15 years, but you can almost see the build up to crises coming. It's just that it gives you, I suppose, an advantage to know that this has happened before. So I would say Phil Anderson, Akhil Patel, seek out their work, and if it works, it works. And certainly, they've been right. They've been calling it right. So, not everybody gets everything right 100%, but certainly you got to say that a couple of big calls, and they've been on the right side of it. So there could be something in it. Tim, I think we should be drawing this to a close, because I'm sure people are ready to have their dinner. But I just want to say a big thank you for everybody's support over the years that we started. I absolutely love doing this podcast with Tim, and it started out because I just love talking to Tim, and I could just talk to Tim every week. I really could, but Tim is is such a lovely guy. He always wants a guest on as well, because I suppose, I don't know why, but it's great to have guests on too. But I'd just say that's how it started. I just love talking to Tim, and I thought we could create the podcast. And I didn't think it would go on for this long. I don't know what I thought at the start of it. It was just a bit of fun, and I've really enjoyed every moment of it. So
yeah, 100%, same here.
So thank you to all our listeners. Thank you, Tim, for putting up with me rambling on, and look forward to another 200 and more.
Indeed. Thanks, everybody.
Yeah, thanks, everyone. Have a great evening or morning, wherever you might be, or afternoon, and we will see you soon. Take care.
Bye.
Bye.